The following is a presentation of TFNN.
Good afternoon, folks. Steve Rhodes here. Hope you had a happy New Year. Happy New Year to each and every one of you listening in live. And looks like we're going to have many folks listening in on the archive. And so for everyone listening in live, you can get this show on the archive under the Celestial Charting button on your members page. And it should be up there by tomorrow noontime. And so hopefully everybody had a great New Year, and we're ready to roll. And so one of the things I'm going to do real quickly, a little different than the normal webcast that we do, and for all of the new subscribers, clients that we do have, you do have access to all of the old archives. I do recommend going back and taking a look at them because it's got a lot of great data information with regard to lunar strategies, celestial charting, other patterns that we trade. In some cases, we were doing some live trading, looking at the charts, if you will. So great information when if you go back, you have the archives of everything there. So I recommend that you do that. Certainly, with regard to the new year, nothing but continued volatility in the marketplace. What I first want to get to is the actual trades that we put on, the reasons why, the thought process behind it. And, and everybody should have received those trades. I did send out 3 Twitter alerts for anybody that is not signed up to the service. That service can be, it can go both to your phone if you're equipped with texting on your phone, and also it can be sent to your desktop. And so there is a software package called TweetDeck, I believe, and I know a number of subscribers use that, and it is a great tool for them. So consider that, to have it going to both spots. And it's just a great way. It takes probably about 15 minutes time between when I actually am able to send the text alerts out, if you will, and get the email with the trade information in and updated. And in any event, today certainly provided for enough time to get into trade, even still. So if you are not in the trade. So I want to first just simply go to the charts. I didn't get any questions, any emails, so we'll open this up, towards the end of the session with regard to any questions that you have about any patterns, maybe some stocks, if I can answer those questions or what have you. So let's first get to the thought process behind what it is, the decision-making process that I went through. If you recall, I believe it was in yesterday's newsletter, and I was talking about this hammer candle. This is the euro, by the way. I apologize. This is the euro that we're looking at. This is the daily chart on the euro. And the 2 red lines here, I'll go ahead and bring that in. Those 2 red lines are very important because they represent, a move of a move. We also had an A to B equals C to D, a smaller one with inside. There's a larger one, that is this one right here. I haven't drawn that in. But the smaller one would really be from this swing point right down here, right to this area. And you can see that finishes right here at that move of a move. So you have an A to B equals C to D pattern that completes at the bottom of this swing point going all the way back to January 10, 2010. So what happens when we actually get down to the bottom of that? When we get down to the bottom of that, we form this hammer candle. And a hammer candle, when those are really great to trade, but they're really wonderful to trade when they come in near the completion of a pattern, whether that be A to B equals C to D, a move of a move, a 0.786 or 618 retracement, a Gartley buy pattern, because hammers only occur at the bottom of a trend. And they're also very important because when those areas are broken, and by broken I mean a close below the low, you can test it by going below it, but as long as you close above it, that would be really a successful test. Now, in the currency market, there's no way for us to test volume and understand volume, and so we just simply go based on candle patterns, and some of those candle patterns can be long-range bars like these here, like this. Red bar here, this green bar, this up bar here, long range bars, as well as hammer candles. So the hammer candle took place on the 29th, which was Thursday. On Friday, as it traded, it didn't get above this swing point, suggesting that maybe it did not want to break out. Maybe it was building cause to go lower. on Monday, when the euro was actually trading and all of us were doing something other than taking a look at the market, it also traded lower. Now, what was interesting about that date was it traded lower, but the DAX traded up 175 points. I did take notice of that. It was a complete disconnect. Wasn't sure who was going to win out. Well, who won out was really yesterday, the euro, when we had this bullish engulfing candle. Now, it only engulfed these 3 sessions right here, but that still is strength. Whenever you can engulf more than one candle, that gives you some strength in the move. What we saw take place this morning, and it was really while Tom and I were on the air doing the Money Master show, was we watched the euro pull back right into this area, which also happened to be the 0.786 retracement, I believe, going from the bottom of that move right up here. So you can see the 0.786 coming in right into this blue line. Now, that blue line, if you trade hammers, what I like to do is I like to just simply use the midpoint. And what I do is if you take a look, all of my information when I'm running my cursor over these candles is up here in this green section. So let me put my cursor over that. And what you can see when you take a look at that is in this case here, since it's a green bar, what you would do is you would go to the open. So I would take the open at 1.29388, and then I would take the low, because that would give me the width of the actual wick itself. And then I just simply would divide that by 2, and I would either add that to the bottom or subtract it from the open. And that's how I came up with 1.2897, if you will. And where the euro actually traded down to, it traded down to that 0.786, got down to, as you can see, the low 1.28967. So just ideal. And where you want to trade hammers is you like to be able to buy them somewhere between that midpoint and the bottom. Obviously, the closer you can get to the bottom, the better off that you are. But if you're using good trade management, good money management, good stop multiplication factors, you don't have to worry about trying to catch the actual bottom tick. The idea is to get in on a trade when there's a signal. So we have 2 bullish signs coming off of this bottom. Now, when I talk about them being bullish signs, you might also remember in Monday's newsletter when I covered the monthly close in December, and the monthly close indicated that the euro wanted to continue to trade lower. The weekly chart shows that the euro wants to continue to trade lower as well. But the way that these markets breathe, what should occur with the euro, now that we've got 2 bullish signs here, and what I was really paying attention to was whether or not, and it still is possible, whether or not today's candle was going to become a bearish engulfing candle, and have total uncertainty with regard to which way the markets want to go. I believe that based on an A to B equals C to D, that's completed in the euro, based on coming back into that swing point, based on this hammer candle, based on engulfing the last 3 candle sessions here, and having just simply retraced to the 0.786. So what the euro wants to do is the euro wants to trade up to this 0.382 area. That would be the normal first move, dead cat bounce. And if the euro is able to trade up there, you'll see the dollar get weaker. You'll see the markets move. You'll see the markets move higher. And so, again, I believe, with regard to, from my standpoint, with regard to clarity, and even I'll shed some disrespect, if you will, to volume. Because the volumes in the marketplace are somewhat questionable, that what we have going on here with regard to the general markets is all really based upon the currency, based upon the euro, the yen, the pound, and the Canadian dollar, but the euro being the primary focus here. So when we got down to that area, what I then did was I wanted more information, and what I did was I shifted to a 30-minute chart to see, okay, on a 30-minute chart, show me what it is that you're going to do. So on this 30-minute chart, here on the euro, folks, what you can see is the euro actually this morning, and I think I put this in the newsletter. I apologize, I can't recall. No, I was just showing the 0.618 retracements that it was doing. And, what it actually did was it created it created a Gartley cell, which is this pattern right here. This is a Gartley pattern. And the normal retracement on a Gartley pattern is from this A point to this D point. This is A, this is B, C, and this is D right here, would be to that 0.618 area. That was about 7 o'clock in the morning when it was coming down towards that area, and or 8 o'clock right here when I think the newsletter went out just before that. So it was coming down into that area, and what we see is it bounced up a little bit, and then it came back down and it touched here. So on the 30-minute chart, as I blow this up here, what we had was we came back to that 0.786, and we created a bullish engulfing candle down there at the bottom. Market moves up. It's just pulling back here slightly. Nothing from a 30-minute standpoint with regard to the bars, if you will. Nothing but just simply normal breathing. And so that's where I got my confirmation, if you will, on the 30-minute chart. Waited just simply for a couple more bars just to make sure, and then went ahead and sent out the alerts that we were going to go ahead and change our position. We were going to go ahead and close out the Q's position and go long 2 sectors. Why 2 sectors? One of the things, I don't know if you actually heard the morning shows that Tom and I did, one of the things that was most confusing last night and was this next set of tables that I'm going to punch up here on the screen, which was the 9 sectors inside the S&P. If you take a look at this volume bar on each of these are yesterday's volume bars, if you will. You can see that each of them are really significant. And I thought certainly that what I had was a bad data feed. I was running into some other problems as well. And I thought that maybe when I woke up this morning and got started that the problem would go away and I would see the reality. But the reality was the problem didn't go away because these numbers are real. And so, when Tom got into the office, we were taking a look at each of these sectors because this is showing. Now, a lot of this volume did come in during the last 10 minutes of the session, but volume is volume. And so what happened is there are a number of A, B, C patterns within inside these sectors, and that is why I chose both the energy sector and the financial sector. So if the euro is going to bounce from here, I believe that the financial sector will be the one that would benefit the most. The banks would benefit the most here, and that was the reason, the thought process behind going ahead and taking the triple in the FAS, and we'll take a look at that trade next. And the energy sector gave an absolutely great signal here from a volume standpoint, the XLE. Let me go ahead and just simply widen this, if you will. And on the XLE, if we just simply take a look at the volume that came in yesterday, you came in with 24 million shares. That 24 million shares was going into this swing point right here that only has 14. So first was going into that swing point. Second, it was getting above a B point here, which is on December 27th, only 5.6 million shares. This morning, as it was trading, it was testing the low on this, couldn't even get back to close the gap, doing that on lighter volume. And so if you take a look at the energy sector, you've got an A to B equals C to D, where you cross that B point with volume. And what that would be setting up is that would be setting up the energy sector to get to 73.64. That makes a lot of sense because as you pull it all the way back here, you're back in that October 27th, that October 28th time frame. It would get slightly above that with regard to an expansion of swing points. The 1.272 comes right in there. So what it looks like the energy sector wants to do, let me make this, it looks like the energy sector wants to go ahead and make a butterfly sell pattern. That butterfly sell pattern completing right here at around the 74.17, testing the high of that October 27th area. So, and if you take a look at the, now if you take a look at the volume on the swing point, from the 27th, let's see if that's the high, 73.19. Yeah, so 73.19. And, it still doesn't have the volume as it's coming in there, but we'll just have to, if the markets do move higher, if the euro does trade higher from here, this looks like a good trade setup. In these volatile markets, I like trading for us because I don't plan on us being in this trade that long. In fact, you would likely think that this trade would complete coming into the full moon cycle. So as opposed to it looking like the full moon cycle being a low of this lunar period, it looks like the full moon cycle may be the high during this period, and that really is being based upon, the good old euro U.S. dollar currency pair and what's going on here right now. So that was the reasons for going ahead and taking the trade again, because if the euro does bounce for us, and if I turn that back again to the daily chart, there are two possible targets. It would be normal for anything that we trade after it's completed a move to do a 0.618 retracement. But right now, we'll just simply play this as we do one day at a time. But the financials, if as I go back to the spiders as well, they also had some very good volume coming into it yesterday on the XLF. And on the XLF, if I widen this up a bit here, what you can see is you came into this swing point. The swing point here on the XLF had 91 million shares. You came into it yesterday with 83 million shares. The A to B equals C to D. There's several of them here. There's a smaller one. This one here, if we take a look at this as this swing point, being December 27th, 26 million shares. Took that out today with 83 million shares. Tested now this swing point here that has 26 million shares. 47 million shares. It's rejecting this area, moving higher. And so that A to B equals C to D would go ahead and take us up into this range right here, 1387. With the possibility of going higher than that, and for the ability for the XLF or the FAS to go higher, really a lot of it is based on what happens with the euro. So again, I think if the euro does move higher, what we'll see is we will see the financials move higher as well. So that's the thought process behind that. We'll come back to these charts in a few minutes as well, and you can go ahead and give me some questions. So I want to continue on with the part of the normal presentation and provide you with information. The information first for all of our new clients here and for everyone else are the dates for 2012. And these are the dates going through the end of May. We do this webcast every other week. The next one will be 2 weeks from now, always Wednesday at 3 p.m. Eastern Standard Time, and always the day before, the day of, or the morning of. Feel free to send me an email if there are some specific areas or topics that you want us to cover. One of the things that we do cover in this webcast and in the archives is the information contained in the New American Ephemeris. This is a sample of one of the pages from this. It's produced by Starcraft Publishing. Here's the phone number on here, and this is what you would order, the New American Ephemeris 2007-2020, for those of you interested in being able to have a booklet of information that has all of the lunar phenomena, which is down here, as well as all of the planetary alignments, which is maintained in the bottom half of the book, which is called the Daily Aspectarian. This is a list by day of all of the planetary alignments that exist. When it comes to the planetary alignments, we take a look at these 5 mathematical, sacred, geometric areas, square being 90 degrees, opposition 180 degrees, trine being 120, sextile 60, and conjunction where they meet up with each other. With regard to the lunar phases, what we looked at is what we look at here are these lunar phases. The ones that we have primarily been following in our lunar chart has been the full moon, new moon, quarter moons, as well as apogee and perigee. And so, these are the moons that we have been following. With regard to the lunar phases that we have, let me pop this up here. Come on. Well, that's never a good sign. There we go. Okay, perfect. These are the January lunar dates, the ones that are highlighted, the ones that we just came off of, January 1st and January 2nd, over the Sunday and Monday of the holiday. And so when we're taking a look at the full moon is really coming in here on January the 9th. If the market does move, if the market moves either up or down from here, I believe it will move up into the full moon or down into the full moon. At this stage, looks like, based on the work that's done with the euro, that the full moon that the market wants to move up into the full moon. We have our next session is going to be on the 18th. on the 18th, we'll be looking at the lunar perigee aspect, and we'll obviously be coming off of a third quarter as well on Monday, Tuesday. On is on the northern equator with regard to the moon. These are just simply all of the major lunar aspects during the month. If we take a look at the what I do have here for you is on the next several pages. So remember, you can go back and you can watch the archive of this, and you can go ahead and write down these dates if you like. These are all of the full moons for the rest of the year. So you have all of that. You might want to go ahead and notate that on one of your charts or information. There are going to be 2 lunar eclipses with full moons, one on June 4th, one on November the 28th. These are the new moons. Whoops. Sorry about that. Let me get back here to the new moons for you. Come on. All right. Full moon. Let's see here. Sorry about this. The computer is acting up. Nothing like that. Okay, here's our new moon. And so during the new moon cycles, we have 2 solar eclipses, if you will, May 20th and November 13th, 2012. So you have all of the dates for your new moon cycles. You also have now all of your dates for when the moon is at perigee, which is the closest to you. And again, I include this information in the newsletter, so if you don't want to write it down, for those of you that do, you'll be able to stop the video. Just go ahead and write that information down. Then we have all of the apogee, where the moon is during that cycle is furthest from us. If we take a look at the when the moon is on the north equator, here are all of those dates and times. If we take a look at when we have the first and third quarter moons, here are all of those dates and times for the remainder of 2012. Here we have the moon on the southern equator. So these are the lunar aspects that are all contained inside the New American Ephemeris. This is the current updated chart. We'll be able to go live to take a look at this. And originally was taking a look at the market moving down into the full moon on January the 19th, and the this new moon cycle, this first quarter apogee area holding as the highs. But again, based on the analysis of taking a look at the euro, that doesn't seem to be what's going to go ahead and take place, and so therefore made the trading decision that I did for us today. This next chart that I pop up here real quickly, this is the P-index date distributions going back. That covers 300-year period from the time period of 1800 to 2100. That is covering the aspectarian portion of the ephemeris. I have this broken down between ephemeris time, that is what ET stands for. EST is Eastern Standard Time, since I have the digital aspects of this. And this just simply is taking a look at all of the planetary alignments that exist on any one day. And what we're looking for here is anomalies. The anomalies are covered in the yellow highlighted areas. And as we take a look at what it is that we have coming up for this month here, for the month of January 2012, the original work that was done on this by Dr. Ruth Miller, Larry Pesavento, and a couple of other folks was all based on ephemeris time. ETO aspect stands for ephemeris time old aspects. Let's see. So that was that. This column here was the original work that was done by Larry Pesavento and Dr. Ruth Miller. What you can see, there's nothing that is highlighted here. ET old. ET old is where you would have only had 3 aspects line up, or greater than 14 aspects, and what you can see is we don't have any of those. What we do pay close attention to, though, is taking the ephemeris, backing it up to Eastern Standard Time, taking account for the time zone difference. And so on the 12th, we'll pay attention to what's going on in the market, because we do have an Eastern Standard Time. This is with all of the new aspects. There are other aspects that weren't considered when the original work was done. And again, we'll come back and we'll take a look at that on January 31st at the end of the year. And then let's see. So that covers this part of the presentation. So I'm going to switch out of here, go back to the charts, and I'll take a look at the couple of questions that I see that have popped up in here. So it says, Steve, based on your analysis of the market going up to the full moon, when would you expect we would switch from long to short? So I would expect that we would, the way that these lunar cycles will work, typically, especially because during the trading day, we would be looking for the high to come into the market towards the end of the trading session. That is typically what we would look at, and we'll have a better feel for things as we get towards, Friday. We have a shortened week, so it's Wednesday, really only 3 more trading sessions as we get towards that date, and we'll just simply take a look at volumes as we're coming in there and determine how to best play it. But what we would be looking at is a change in the trade come Friday. Another question, Ron D. Steve, on your show this morning, did I hear correctly? Gartley's work 70% of the time. Yes, Gartley's and butterflies work. My experience is 70% of the time they are successful. Steve, how much upside do you see in the S&P? Listen to Tom, he likes 1292 to get tagged, so we should go up into January 9th, and then we would look to go short. Yes, that's correct. So as far as upside in the S&P, that 1292 area makes sense. If I just call the lunar chart back up here on the screen and we take a look at any patterns, there really is on the SPY. If we take a look at this swing point here from December 27th, if we're going to be consistent, just so we were when we took a look at the XLE and the XLF, the SPYs had 85 million shares. What did we do yesterday? It gapped up with 193 million shares. What did it do today? It came back and it tested, couldn't even close the gap completely. It's come back on lighter volume. So you're coming back on lighter volume, says it wants to really continue to go higher. We know that it's going to be based on the euro, and a lot of the work in the euro is going to, can be done overnight. In fact, the majority of the work can be done from about 2 o'clock in the morning on when the London exchange really opens. For those of you that know that I pay attention to the opening range in our markets, I also pay attention to the opening range in the currency market, and that is between 2 and 3 in the morning East Coast time. So I do take a look at, because that's where you've got the largest currency trading that typically is taking place. So if we, the euro, the S&P could have even more upside, quite frankly, than the 1292. The S&P could be doing this ABC pattern here. We go ahead and make that shorter, and they would said these. Again, I'm talking about the S&P. I'm talking about the SPYs, which correlates. So you'd be looking at 131.59. Now, if you take a look at 131.59, let me make this shorter here real quickly. What you're going to see is a butterfly pattern. So the butterfly pattern would take you up somewhere right into that area, and not the prettiest looking butterfly, but you'd be looking at an expansion of swing points. So that would be an A to B equals C to D. And if we take a look at just simply going from October 27th, using that as the benchmark, down to the low, which we had coming back off of Thanksgiving, what you can see is you got 133.02. So 133.02, quite frankly, is another possible butterfly. Now, I think that it doesn't complete the AB equals CD coming up in that area. It doesn't. It'd be shorter. But, I think that's what we're looking at. But mostly we'll be monitoring this based on, what we see going on in the currency market. We just simply have to. It is amazing the correlation that exists out there, and it is about paying attention to the currency market in order to be trading the majority of these ETFs. The reason why I went into the spiders was just simply because the amazing volume, and it looks like some pretty decent upside potential there. Are both of the buys, FAS and ERX, at the entry price or better, or anywhere in the area? Anywhere in the area was good with me when I sent that message out. So on the text messages that go out through the Twitter alert, and I'm not really a Twitter user, folks, but I use the tool that's contained in there because I'm able to get instant messaging out to all of you, and a majority of you do use the service. So thank you very much. And those that aren't using it, I just want you to be able to use it on your desktop computer through that tweet deck. And so I'll send out a message that basically will say, you can go ahead and enter now, and here's what the price is, because I'm not really worried when we're taking a look at these trades. I was more getting confirmation with regard to what was going on with the euro, and once I had some confirmation there, I wasn't worried about 10 or 20 cents or something like that. So it's still okay to go ahead and enter the trade now, in my opinion. So hopefully that helps. Couldn't we just continue moving sideways into the full moon or even the new moon? We absolutely could. That certainly is one of the possibilities that we could move sideways. The things that, so let's take a look at the other aspects that I looked at with regard to the trade and the thought process. One of those aspects, as you know, was Apple. Well, first let's pull up the Qs. So let's pull up the Qs and see what it is that we have here. The Qs, what I have shown you, let me go ahead and get rid of this. Okay. So when we entered the trade on the SQQQ, it was right in here as we were making this 1.272 expansion, and we saw the euro start to fall apart, around 9:30, 9:40 in the morning on the 27th. And that was when we went ahead and went short. In the newsletter that I had published that morning, I was showing both these patterns and suggested that we were going to wait to this 0.786, 1.618 Gartley pattern that was out there. And, as I sent out yesterday, in the update, what we had happening, we were watching to see where, in fact, the Qs were going to close, and the Qs penetrated this swing point here from December 5th, because that had 40 million, and you were coming into it with 39 million, so it was pretty much a draw. You were coming into that even though you did come through this B point here on this smaller A to B equals C to D with a little bit higher volume. We're trading up inside that today. And so when you trade up inside it, even if you're trading up on lighter volume, says that you can go ahead and test the high. Well, here's the deal. One of the things on these Gartley patterns is that when the 0.786 Gartley patterns fail, what I always look for is I look for the butterfly pattern, because when a Gartley pattern fails, they typically will turn into a butterfly. So when I started doing that analysis to say, okay, looks like this pattern here, is going to fail. The 5693 is going to fail. In my opinion, this is not a failure just yet. But when I started taking a look at it, and one of the easy ways to draw butterflies or Gartleys, you're looking for the expansions of swing points. With the Ensign software, it's very easy to do that, because I can just simply go from my X point here down to this swing point, and I just simply am able to get my expansions. I'm able to draw on whichever Fibonacci numbers I want. In this case here, I've got both contractions and expansions. Well, the expansion, if this Gartley fails here, this will turn into a butterfly. And when it turns into a butterfly, you'll see that it would get up to 58.96. So, we're trading at 57.12 right now, with the euro having the opportunity to go ahead and bounce to that 0.382 area. Getting to 58.56 will not be difficult at all. Well, what else is at 58.56? At 58.56, not only do you have this November 15th swing point, but if we come all the way back here, we've got October 27th. The low on that on October 27th is at 58.03. We're talking 58.56. So what I really think is unfolding here inside the Qs is the 0.786 Gartley is going to fail, and it's going to turn into this butterfly. And that is the place where we would take a look at selling the Qs, assuming that they still continue to show the weakness out there. If I go ahead and take a look at the, and so all of that is now setting up with the general market, what I really like to look at, which is the New York Stock Exchange. So the New York Stock Exchange yesterday broke out of this triangle with conviction. We had kind of broken through it. We were just hanging around, the descending highs that we had. And so these channels, if you will, this triangle that we had here, we clearly broke out above it with conviction yesterday. And this looks like the New York Stock Exchange is really setting up the A to B equals C to D that would take us back to the October 27th high. This is that evening This is the Three Rivers Evening Star pattern that we have here. And when I take a look really at the P-index date, it's really the New York Stock Exchange from the October 27th that is critical because this has the breadth of the market. So looks to me like, we're trading above this B swing point here. The euro has given us the signal. And so it looks to me like the New York Stock Exchange wants to trade all the way up to 78.28. The other element that factored into the thought process this morning was where the actual German market closed, where the DAX closed. We couldn't get the volumes on this, so I just simply had to make a judgment choice. And based on the other elements out there, all that the DAX did was come down, wasn't able to close the gap here, but simply closed back inside the candle from yesterday. And so it was just another signal that the markets wanted to go ahead and trade higher. When we go inside the Qs, when we were taking a look at Apple, Apple is the one that seems to indicate that it wants to go ahead and close the gap from that island reversal, and that the Gartley pattern that it has here at 0.786 would fail. And yes, that would suggest that Apple could actually then turn into a butterfly pattern as well. So we'll just have to, even though Apple is the largest weighting, as I included in the newsletter this morning, with all the weightings, number 2 is Microsoft. And so Microsoft was giving a big signal that the Qs want to move higher. The Microsoft chart here, as I pop this up on my screen, you can see that, number 1, yesterday you had some nice volume. Number 2, you are coming into this swing point on Microsoft from September 20th, which had 49 million shares. Yesterday you tagged that with 64 million shares. Today you're at 69 million shares. And the market's only up 27 points. So, and Microsoft does not normally move like this. So now you got a gap up on Microsoft. You've got two large volumes coming into this swing point here. And if you take a look at what kind of volume you have at the highs, you got 74 million shares at the highs. Again, only 49 million here, but you're starting to come into that swing point here, going back to July 26 with some volume, with some juice behind it. So that, is another factor that had me go ahead and make the move that we did. KJS, are we still waiting to get stopped out of SQQ? No. When I sent out the alerts this morning, or this afternoon, I apologize, I suggested that you close out the SQQQ trade. It's trading right around in the area of when we closed it out. It's only down 25 cents right now. I would go ahead and close the trade out on SQQQ. KJ, what software did you say you used to draw the guy? This software package here, folks, is Ensign Windows. Ensign Windows is a monthly charting service. I believe it's like $50 a month. What Ensign Windows has is because I trade expansions and contractions between swing points, and I look for 3 drive patterns to show up. Ensign Windows has this beautiful tool. I'll go ahead and populate this Microsoft chart here right now. It's a study. It's called Pesavento Patterns, and we know who that was named after. And automatically, what it will do is it will measure the mathematics in between all the swing points, so that it makes it easier for me to watch multiple charts. I have multiple screens, so this is a very small window here. Right now that we're taking a look at. And so in an instant, I can look at a screen and I can look for expansions, contractions of sacred geometry that come together, and then go to work when I see something show up that that makes a lot of sense. This here, you can see you probably have a 3 drive pattern coming down towards a 0.618 retracement, and then you've got the market goes ahead and moves up. Does a retracement on a 3 drive pattern. In fact, one to show you what that looks like. Let me get back to this tab right here. Is a stock that was. Give me one moment. The stock here is KOG, and this is a energy stock, I believe. And you can see here is what you like to look at. This is a nice 3 drive to a bottom pattern. Almost, you've got 1.272 expansions, a 1.618 expansion from here down to here. Very symmetrical in shape. And what this was doing was this was making a 3-drive pattern coming down into a .786 area. Now, this is not a trade that I caught, but I did save this. This was a question that was sent in to me yesterday, more so about what to do about the trade here. Up at these highs, but I do want to show you that the software is very good at being able to draw these or being able to help me pick that out. If I just simply turned on Pesavento patterns here, there's ways to go ahead and change the software up so that you can have fewer lines or more lines, if you will. So that's the software package that I use. I haven't heard much of on series lately. Are we still watching its aspects? When are the next series dates? Next series dates are I don't recall off the top of my head. We are watching that, but those are longer term cycle aspects. It's really that July area. But I'll go ahead and go back and take a look at that, Mike, and update that in one of the newsletters, or maybe do that over the weekend. KGS, he said to close the SQQQ position. Oh, okay. So I think Dave was just answering while I was babbling. Thank you, Dave. Appreciate that. Didn't see the text. Okay, great. It's in okay. Today, market up, dollar up, euro down. Any explanation seems backward. Today up. Well, the euro is down. If we go take a look at the dollar, I'll go ahead and pop that chart up here for you. The dollar is... the dollar hasn't had a lot of, let me just put a shorter term chart up here for the dollar index. The dollar, it really is, it's been trading down, if you will, since 1050 this morning. So not a lot of movement. We haven't seen a ton of movement yet from the euro as well. But you can see that it is starting to trade down. The thing is that we've got the currencies that are trading round the clock, which is why I if any of you do trade the currency pairs, you can, send me some emails if you have some questions. There are already clients that do that, and they get back with trade suggestions on some of the currency pairs, and but so much of this work is going to be done. It's 345, and the euro and that's why we're having such volatility, because of the moves inside the currencies, because those are trading in a normal pattern. If you were trading the futures market, you wouldn't feel like you were getting jockeyed around as much because they're working in lockstep with the currency market. So if the currency market and the euro does start to move up, we'll see a gap tomorrow. We'll absolutely see a gap tomorrow. Likewise, if it busts through this hammer area here, then I was wrong on my analysis. I'll apologize ahead of time, and we'll go ahead and we'll take a look at what our next trade should be. But right now, based on everything that is out there, looks like the euro from a trading standpoint let us in on this hammer where you would like to have been let back in on the market. IWM is trading below October 27th candle. The IWM, take a look at the pattern out there. So on the small caps, Steve, what you have is it is absolutely showing some weakness. Even yesterday you did have some volume come in, but you still closed below. You could take a look at the B point, again being that December 27th, 26 million shares. You had volume yesterday, 60 million shares, but you still closed inside there. I still believe that the small caps want to trade up to the October 27th area, and quite frankly, the small caps, if the euro gets moving, the small caps will go ahead and actually trade up probably above that and trade into that 77.83 area. And at 77.83, what you have is nothing there. You probably have it here with regard to a little butterfly that's being created. So you've got a butterfly pattern there. And one of the easy ways, if you're trying to draw these patterns, is just simply to use your retracement tool in between swing points, and then you try to identify where your expansions line up, and you try to find where they line up with contractions as well, and to see whatever patterns might be out there. If we take a look at the contraction here, 786 is all the way up there, so there's nothing that lines up. But on the smaller term time frame here, you would have a butterfly, a 1.618 butterfly that would occur and would close above this area. It would be something like about that. Okay, IWM. Okay. Any other questions that you folks, anybody might have out there? I'm going to see if there's something else in here that I wanted to cover for you. Well, so our FAS trade, let's pull this up. I don't think I pulled this up. If I did, I apologize. We'll do it again. Here was the entry on the FAS around 68.30, trading at 68.52 right now. Stop is 64.44. Exit somewhere around the 80.75 mark. The 80.75 mark, you can see even on the FAS with this being the B point, 5.8 million shares, gapped up yesterday on 13 million shares. You've got some, you came back today on lighter volume. So, just continuing to suggest that the move should be higher. Again, the FAS is more of a trade should the currency pairs start moving. What you can see, we have a 0.786 Gartley that completes where this 1-to-1, A to B equals C to D, 76.06. I've got it, our exit in the $80 area, which would be more than a 1 to 1.272. A to B equals C to D, and we'll just see how this trades as we move along into Friday and Monday. Great Apple analysis in your newsletter. One consideration is earnings on January 24th, which will probably prop the stock up. It's a good point, Steve. What I don't do, I trade, irregardless is not a word, I would have been reminded that, regardless of earnings. I just simply really do take a look at the patterns. Right now, for me, and you'll probably get tired of hearing it. You probably get tired of hearing it in the newsletter. It's really all about the currency pair. It's really all about the connection, that we have going on right now. And I know that, as I turn on the news, I hear, the same information that you do or read the papers, whether it's CNBC, Wall Street, the Financial Times, anything. And it's really nothing more than all about the correlation between the markets and the currency pair. And I know it's the currencies that drive the markets. It is not the other way around. And so long as this correlation exists the way that it does, this is what's driving those markets. So, if the Q's back under the 56.93 level today or tomorrow, would that still be a Gartley? Yes, yeah, the Gartley is really still in effect at the moment. So the Gartley is still there. It is, but the way that Microsoft is trading. The way that, Apple has not yet backed off, the way that, it looks to me like this is going to fail. Now, and here's another reason, Steve, or XXO. Here's another reason. This is the C to D leg, right, on the Gartley that we have here. Let me get rid of the butterfly, and let's get rid of, if I can, this one. Oh, got rid of the wrong one. So on this Gartley pattern here, let me just redraw it in, and we'll just use the actual numbers that turned out right here. We'll put it right down here at this point, 786. When you're coming into the D point and you come in with a gap, and especially in this case here with volume, that really does suggest that in other words, I wouldn't have put on the SQQQ trade if we actually had waited to the 0.786 from yesterday. Knowing that we had gapped up into it. So you don't want to, how you're coming into it in that final C to D leg, is one of the ways that you take a look at making sure that you try to maintain that 70% win rate on those Gartley patterns. So, but we were already in the trade when we took it right here, and we're just simply looking for information to say, okay, this is cool, it didn't bust through it. But the way that I see some of the other holdings with inside the Q's trade and what we have here looks to me like this wants to give way. So I hope that helps. Mario. Oh, Mario. Thanks, Mario. I appreciate that. Okay, so 3:52, probably time for another question or two. If not, let me just see if I had any. Oh, I did have the ERX trade. Let me throw that up on the screen, like we did for the FAS trade here. Here is the ERX trade, and what the entry point 50.65, trading out at 50.88. Our stop is 47.38. Exit 61.62, 3-ish area. Which what I'm looking at here, folks, is nothing more than just simply, again, that sacred geometry, taking a look at the next logical spot that this could trade to based on the volume that came in on the XLE yesterday, and that is nothing more than the 618 retracement going back here to July 25th, all the way down to the October 4th area. 63.31 is really the spot. What we have is we have a nice 1.272, really a 1.618. You know, when I see 1.74, that's close enough for me. So you have a nice little butterfly expansion that could get us up into this 61 area, and as one of the possibilities. We'll just have to play that one. But that is how I created the exit strategy, by taking a look at any other patterns that would be out there. So hopefully that is helpful to you as well. All righty. Anything else, folks? And as always, feel free to give me a call in the office. I am available to you as much as in my emails that I send out to you. You also have my cell phone. And if you get a message, just leave me a message, and I will do everything in my power to get back to you. And, have a great day. And we're going to have a great, fantastic 2012. I've got some additional thoughts and ideas to continue to improve the service from the standpoint of creating some videos that you would have access to, really dealing more with the psychology of trading and belief systems and so forth. So really looking forward to trying to put that piece of it together, and just do anything I can to help each of us with regard to our trading. So, Steve, do you believe gold hit a solid bottom? No, I do not. If so, do you look at any miners since they get beat up so badly? Yes, I do. Right now, the only gold stock, Great Basin Gold, it's been my nemesis, if you will, and it still looks like a good stock to hold on to. And but right now, the miners are not the time to be not. It's not the time for us to get into any of the mining stocks. So you're welcome, Ron, and Happy New Year to you as well, Bill. The trade's in Bourne, hopefully, and for those of you that are new clients, when you're taking a look at the buy list, I'll just quickly cover that. The buy list, folks, are patterns that are ideal setups if the stocks ever come back to those areas. What I have learned in this business is be patient. That's why they're on that list. They'll be on that list. You can put advanced orders in, or, we'll know when we get down towards those areas. If the stocks move down there, those are wonderful breakout opportunities for us, and we'll be buyers because there probably won't be other folks willing to buy at that stage. So as long as volumes are right as we move down in there. So 3:56, production needs to go. Thanks for your time, folks, and have a great afternoon. Take care. Bye-bye.